We have the Dow down 610 points now. The losses are accelerating, and as you see right now, we do have all red on the screen. So let me just get you up to speed here. The sell-off is adding to what's already been a crazy week for stocks. The Dow is on track to shed more than 940 points as we look at the biggest setback in 2 years. This is by the week here. Now, keep this up, please, if you could. Look at Monday. We lost 177 points after gaining 223 on Friday. To the right, we show that incline throughout the week of that 10-year Treasury yield. So you have an inverse relationship here. As stocks are falling, you have the 10-year moving higher on that yield, and that means money's becoming more expensive. Stock market doesn't like that. Then on Tuesday, we lost 362 points, a few gains on Wednesday and Thursday, but combined, we're looking at a little bit of concern and major jitters at the moment. Let me get to traders on the floors of the New York Stock Exchange, and also joining us at the moment, we have First Trust economist, chief economist Brian Wesbury. I would like first to go to the New York Stock Exchange. Give us a sense of why and what is at the heart of this beyond what we've articulated. And it's a Friday. Who wants to go in long for the weekend like this?
Liz, right now the S&P 500 is almost exactly at a 50% retracement from where it closed 2017 to the all-time highs a little bit more than a week ago. So this will be a critical level to see if we can hold this 2765-ish level on the S&P. That being said, the big rally really started in mid-November, and a 50% retracement to that level would put the S&P right at about 2,700. Those are two critical levels to watch the remainder of the day and maybe on Monday morning.
Okay, I'm going to ask if we can get some 2 days up so we can see that change, because we were up slightly yesterday. Now we start to see this movement to the downside. Brian, give us a sense right now of what people in your world are doing. Off at the trading floors, are they licking their chops perhaps and saying there's some good bargains right now to be had?
I love days like this. If you think about it, corrections are designed to scare the weak hands out. And the people with weak hands are the ones that didn't really know why they got in. And they got in because it was going up. But the reason to invest in stocks today is because the economy is getting stronger. Earnings are accelerating. They're going up about 15% this quarter over a year ago. And next year, this year, they're going to go up 15% from 2017. Yes, the Federal Reserve is raising interest rates, but those rates were too low to begin with. So don't worry about that. Stay an investor. And let everybody else scream and yell about days like this. But this is a day where you need to be buying. If it goes down more on Monday, buy some more, because the market's cheaper than it should be right now. This is pure fear at this moment, and it's not justified by the fundamentals.
Yeah, fear, or you've got a razor-sharp turn in sentiment. In fact, it's interesting. Right before I ran down here, I checked the Wall Street Journal's headline here online, and it had said Dow set for worst week in 2 years. Then we went down more than 6 points, 600 points. We're down 603. And I'm looking at a headline right now that says, can we check this? Dow falls more than 600 points, and this is set for the worst week in years. They took out the 2 years. Tim, how much worse does it get?
I really think that we're probably at a level, as even if we were to approach 25,000 on the Dow, that was a major breakout level. And you've got a lot of levels here that should hold on the intermediate term. I agree with a lot of what Brian said. That's not to say we can't go a little bit lower. We can't test some other levels. We can't have a little bit more shakeout of some fast money next week.
Yeah.
But certainly from a fundamental perspective, everything that Brian said is spot on.
Well, we're just off lows of the session. I would like to point out that I believe the Dow is still up about 38% since Election Day. So, again,
right.
Perspective is super important here. Gentlemen, thank you. Brian, it's great to see you. Tim, we appreciate it. We may put Tim, or at least another trader, back to work. We're hauling people in from all over as we watch the Dow down about 572 points. And yes, as I said, there is a pretty significant shift in sentiment at the moment. But remember, some of this could be attributed to Apple dragging down many of the major indices because people simply didn't like the fact that their operating expenses are growing faster than revenue. So that's a single stock story. Combine that with some real nervousness inside the Beltway and much more.